right, everybody, how you doing? My name is Eric Greenstein with SoFlo Real Estate Investors. Today is this is actually our May 2021 meetup. We do have some new faces in here. Really appreciate the you coming on here and explaining what you're doing and sharing your experiences. But yeah, if you haven't, we have a website. It's SoFlo REI.com. We have all of our previous basically meetups. We did have some special guests that were on there who are actually pretty awesome. And that's what I'm also looking for is other people to basically speak on here and basically explain how they got to where they are, and yeah, and basically any experiences that they can share is great. So if you have anybody in mind, let me know. If any of you want to, feel free. That'd be awesome because we just keep building and bringing in really experienced and awesome people. So again, I appreciate you guys coming. So basically today is just a round table. I just want to introduce everyone and see what if anyone in this room could help in any way, share experiences, etc. So, Juan, you have the floor, sir.
Thank you, Eric, and thank you for inviting me and sharing with everyone here. Robert, congratulations on your first closing. I actually I'm celebrating my first fourplex closing last April. So I guess my story is I bought a couple of condos in the Texas Rio Grande Valley. 2012 I started, and it was really casual, but it was only during the pandemic that I really started with a mindset on a real estate journey. I'm actually physically located in Monterrey, Mexico, but I am a U.S. citizen, and basically went to school in the States. So I'm very familiar with the border. I'm bicultural. I'm bilingual, binational. That's it. No more bis. But basically, I started with this journey, and I took note that yesterday it was a year yesterday that changed my habits. I start early in the morning with reading on business and mindset and real estate, basically focusing on real estate. And it's just going through these habits with respect to real estate is reading every day, just learning every day, a podcast every day, every Monday, not missing out on the Steve Rosenberg seminar, which is how I met Eric. And follow the steps, follow the process, trust the process, and it works like clockwork. It just works. Amazingly, just doing a recap of the past year and how I built the team in Texas, and how, just today, this afternoon, working with the property manager, working with the vendors, subcontractors, handyman, and just having that very well organized as they teach you in the books and the podcast, it works. And when you get that mindset and the energy, they say a little bit of progress, but constantly every single day, it works. So I'm very enthusiastic about the future, even though, I started this late on. I'm in my 50s, I'm 51. It turns out that Grant Cardone started his, gung-ho, major real estate breakthroughs at 51. And this guy, some may not like him, but he's doing awesome. I mean, this guy he's like a pit bull when it comes to, syndicating and doing all of this. I can tell you that 3 lessons from that past year is, constantly learning, moving the ball just 3 yards every single day, getting that mindset and focusing, just focusing. I I was in a meetup last week with the Rio Grande Valley, and they started with investing in notes. So you tend to go, oh, they make this return in notes, so I'm going to notes. My lessons have been just focus. And the reason I say this is because there are a lot of options in real estate. I'm just listening to you, Robert. You mentioned $500 a night. Wow, that is just so tempting that it's going through my head. And then also it's going through my set. Don't follow that. Just stick to what you have, because I'm going to try to do a lot of things and maybe screw up what I'm doing. So that is in short the story I can share. I'm looking at other deals, and I'm in terms of growth. I'm actually trying to build a network, and go to the major deals, go to the big deals with a group of people that are enthusiastic, hardworking, um, honest, and they're just willing to pummel through it. And I think it's a journey. It's but it pays off. That's a story I can share with you. And right now, I mean, this month I started getting the rent from that fourplex, and today I rented one of my condos for a higher price. And I think just working with the lingo and getting used to, and all of a sudden you feel like a fish in the water. It comes natural. When the first few weeks, it was like trying to learn the language and the terms. Doing this every day really gives you the confidence to talk to brokers, talk to and speak their language. I've actually gone through other deals, just analyzing them real quick, and turning them down because they don't make any sense. The market is hot, but they're asking prices that may work for other people who have other strategies, maybe institutional buyers that want to get a tax write-off. But for people like, I think, us, who want to make cash flow and capture some equity in the purchase, it may not be the one solution for all. But I think there are deals out there. I think the way to get them is just look for them every single day. Just be out there looking for them, and looking at them from different angles, and see how you can make them work. Whether it's through creative financing like seller financing, or doing options. Eric, we had a guy speak to that, who was brilliant with the Steve Rosenberg seminar. So just the growth and the learning, I think is my main point here, and I'm extending myself. So thanks for listening, and if you guys have any questions, I'll be happy to go through my experience, as little as it may be.
Nice. Thank you. No, yeah, when we talked last, it was a pleasure talking to you. And of course, we talked about the prices. I got a little excited, right? I got
Right.
like what you were talking about. I got a little excited. I'm like, oh man, I'm like, those are like half the amount of what the prices are in South Florida. So, but yeah, again, thank you for joining, and I'm definitely looking forward to building our relationship a little bit more and learning a little bit more about you. Robert.
Yeah. So new investor, like Juan Carlos, I'm starting a little bit later in life. I'm 46, but I picked up my first investment property, just closed on it Friday of last week. 3-2, single family home, pool home actually in Seminole, but it's four minutes away from Indian Shores Beach. So It's pretty great location, quick drive to everything. Could actually bike to the beach if you want from it. And the play on it is a short-term rental. With the numbers in Florida, the pricing, like you were just talking about, Eric, um, the pricing has escalated. If I would, what is the old saying? When was best time to plant a tree? Yesterday, second best time today. I keep thinking about, when I started looking in South Florida about 2 years ago, I should have pulled the trigger. you know, um, but it doesn't matter. I mean, I found a house off market. If it had gone on market, it probably would have sold for well over 400,000. I got it, for 375. The mortgage, I got a crazy mortgage rate on it for a second home with a second home loan, 10% down, 2.875 on a 30-year fixed. Yeah. So it all kind of fell in my lap, and believe it or not, it actually came through connecting with Steve Rosenberg, the think tank mastermind, all of that stuff. Steve Rosenberg introduced me to this guy who's a flipper, and he's also a new investor. He's been flipping for a while, but anyhow, he just happened. We got to talking. He was offering me a 2-bedroom, 1-bath that could long term for about 12 to 1400 a month, and it was 221,000. But my wife has not been sold on the real estate investing thing yet. So I had to kind of grease the wheels a little. So I said, hey, I'm going to buy us a second home. We can short-term rent it and we'll be able to make use of it. So now that she's seen it, we've got it. She's excited. Now she's kind of starting to see the bigger picture. So I kind of was able to win her over with that. And, on conservatively, the research I ran on it was if I rented it out only 50% of the year, okay? If I rented it out only 50% of the year based off of what everybody else is renting around me, my mortgage annually will be about 20,000, just a little over 20,000. And if I occupy this 50% of the year with nightly rentals at the going rate for the seasons, I should make somewhere between 30 and 40,000. So right off the bat, it potentially could double the mortgage in 1 year. And if I needed to long-term rent it, my mortgage is about $1,700 a month. But the long-term rentals there are going for about $2,250 a month in this area. So that's an additional exit strategy. And the way South Florida keeps escalating, if I needed to sell it for some reason, I'd get my money back plus profit. So seemed like a pretty safe deal. But yeah, like Juan Carlos was saying earlier too, it's easy to get tied up in all these different directions. And I just kind of made my mind up to focus on really the short-term rental side of things, because it seems to yield big returns. I know it's a lot more work, but the returns are big. So thank you guys for having me on and inviting me into this. Super excited to get to know everybody.
No problem, brother. Thank you again for joining. Love the story. I believe in short-term rentals as well. So definitely I definitely like that strategy. Chase, you're up, buddy.
Sorry, guys, I missed the first part. So what do we got going on here, Eric? I had to take a call. I apologize.
It's basically just a round table. Just introduce yourself, what you're doing, your strategy, who you are.
Awesome. Yeah. My name's Chase. I'm in the South Florida market, Fort Lauderdale, Broward County, primarily. I'm a real estate professional. So I'm a broker. I run a construction business down here. We do some fix and flip stuff and, a few other deals that are going on right now, but primarily I'm focused on building the brokerage side of things right now. I don't have any investment properties per se. I'm working on a couple with a few partners right now. So we're trying to get that, that first property and under lock while, building 2 different businesses here in the South Florida market. Congratulations to you, Robert, for that short-term rental. Those are powerful, powerful tools in a hot market and a rapidly appreciating market, to where, nothing really makes sense cash flow wise. You have to get creative. And so those short-term rentals are creative. The seller financing deals that are out there, those can make or break a deal. They can make deals work that won't work for anybody else, just because you asked a seller, hey, would you mind holding some paper on this? You never know what kind of position somebody's in or really what they're looking for. And so it's all about, motivation, what the other person wants, and how you can help them get to, meet their goals, really. And so, if you can help them and then along the way it helps you, it's a win-win for everybody. And that's how deals get done. It's a crazy market down here right now. So we're looking at a 16 unit, right? Like kind of downtown Fort Lauderdale area. It's actually a different 16 unit than the one that I was showing you, Bobby and Eric. So this one just came on the paper, or came on the plate last Saturday. So we've been trying to get the due diligence, run the numbers, getting guys out there. But these deals are, they're bigger bucks. So it's a lot more to raise, and it's a lot more risk, and especially, younger operators that don't have deals like that under their belt. It's a little bit harder. So that's what I'm here.
Love it. And also, Chase has found this beautiful duplex that I live in currently. I appreciate you on that. And
you got to steal, man. If you weren't gonna buy that thing, I swear to God, I would have bought it. I promise you.
I know that was my fear, actually. I mean, it's kind of crazy. Like, looking back, I mean, only a couple of months ago, but I bought it for $390, a duplex. I had a 2-1 and a 2-1 in like a area called River Oaks in Fort Lauderdale. And right now, as it stands, I don't know if you know this, like, this is for like 430, 440. I mean,
Easily.
I'm not gonna sell it, obviously, but it's just insane how where we landed. We definitely got lucky with the appraisal.
Eric, I have a buyer right now that'll probably pay you close to $5 for that thing. I promise you. I can't find him anything. We're getting bid out everywhere.
Hey, Bobby, you have to move out in 30 days. No, I'm kidding.
I know. It's a short-term rental. You forgot to tell me that.
That's great. But again, Chase, always a pleasure, my man. Thank you for coming on. So I'm gonna go with I don't see Deontay. He seemed I don't see him on there, but D.
On there. Hey D.
Oh man, how you doing?
What's going on, fellas? It feels so good to be back.
Yes, love it.
Hey, what's going on? I'm Deontay. I'm down here in the South Florida market as well. I'm a gas guy by day and real estate investor by night. So I was telling Eric earlier, man, I've been in the cave. I've been in the cave just learning. I feel like the pre-foreclosures, tax liens, and probates kind of found me. So that's kind of my niche right now. Just working on short sales, helping these homeowners negotiate short sales or find some type of solution to figure out their pre-foreclosure issue with their lenders. It doesn't always go to short sale, so I've been able to help with 2 homeowners. I received a kind of like a finder's fee. I had no idea what I was doing on the first deal. This property came from driving for dollars. I thought I would be able to wholesale a short sale. Coming to find out, you cannot unless you have access to funds. So I knew a really good realtor that's had experience from the first time the market crashed and everything. So I introduced her to the seller, and she helped them the entire way. It took about 8 to 9 months to close, and I finally got that check for it. And pretty much what I earned from that opportunity, I received the experience getting the property had foundation issues. The property had a roofing issue, whereas in the front room, the roof had collapsed in the front half of the house. And the second half of the house, the foundation was pretty much split down the middle, and the back end of the house was pretty much sinking, starting at the backyard. So it was a learning experience. I was able to figure out what it was like to get in contact with contractors and trying to schedule estimates and things like that, and getting a good idea of what type of repairs need to be done. And it's still a work in progress. I was there not for the entire process, as far as, being able to witness the BPO part of it and things like that. But it was an exciting experience. So from there, from that experience, I decided to reach out to someone that actually is a loss mitigation specialist, and I paid a consulting fee to pretty much learn what it is, from start to finish, as far as the negotiation process, finding these properties, how to pretty much lock up these properties when the opportunity arises. I've been able to make a relationship with an individual that can do transactional funding. I've been able to create a relationship with somebody that has private funds. I've been able to create a relationship and put in an application for hard money. So the funds that I received from the first property, where I feel like I dropped the ball, I just took that and I invested it with another friend, whereas I was able to JV on a fix and flip. So that's another thing that I'm learning. So my two focuses is just that, figuring out what's the exit strategy, either cash, terms, or both is my main focus. I started out thinking I wanted to wholesale. I kind of got pulled in the pretty much in the area of figuring out how to fix and flip these properties, and then to earn enough capital, I can start to buy and hold these properties and either rent them out. I hear a lot of people talk about short-term rental space. I haven't put too much energy into that just yet, learning about it, but Florida is definitely the place for it. Hey, Chase, I live in Miami Beach. If you're looking to invest in Miami Beach, the building that I live in is currently for sale. And then there's literally 2 Airbnb properties that I'm looking at right across the street from me that's going up for sale. It's a couple of off-market deals. Let me flip my camera. I don't know if you guys can see across there, but those 2 buildings right there, that one's currently occupied with Airbnb tenants. This one, they haven't even finished working on this one. They started the renovation, and it's been sitting like that literally since I've been here. I've been here since December. So one of the other neighbors told me that she had spoke with the owner, and the owner said, yeah, there's one owner that owns all 3 of these buildings. And the owner said, yeah, these 2 are for sale, but the third one is not. So I can shoot over that information if you're interested, or if anybody in here that's interested in commercial or multifamily, that's an opportunity. But yeah, man, so far for me, it's just learning about pre-foreclosure, short sales, and tax liens. That's kind of my niche right there. That's my thing.
Awesome. Well, it's been a while since I've seen you and talked to you, and I can tell you from then to now, huge improvement, my man. Huge improvement. I mean, you know your focus, you know what you're doing, and I absolutely love it. So we gotta talk after this. I'll shoot you a call and we'll talk. All right.
Oh, I forgot to mention one thing. Sorry. I'm actually working on securing my first short sale in Plantation. So I'm already in negotiation with the bank. I already sent in all of the paperwork. So I'm gonna secure this one with hard money. It's gonna be a light rehab, fix and flip, and trying to bring home some more bacon, man.
It's my neck of the woods, Dante. I'm right in Plantation.
Oh yeah, okay.
Oh yeah.
I got a couple probates that I'm looking at over there. So if you're
There's
interested,
some good deals out here, man. I've been looking for some fix and flips out here, so they're out there.
Oh yeah, most
So,
definitely. We'll definitely talk, man, because it's a couple of them that's over there that
yeah.
I can most definitely. We'll talk. I'll get the information after.
All right.
This is getting ferocious already. Eric, can I jump in with a couple of questions for Deontay?
Absolutely.
So Deontay, can you share a little bit more on the foundation issue that you found? I'm actually in a similar situation, and I'm hesitant to move forward. What did that look like? What did the cracks, or what did that look like?
It literally, it was an illegal add-on to
Oh.
add. And the homeowner said that, oh yeah, we had the permits and everything. We looked online, couldn't find the permit. So it was an illegal add-on. Apparently in that part, it was in Lauderdale Lakes. And right just behind all of the properties, there's a divider wall. And then there's a, what do you call it? A shopping plaza right behind the property. So pretty much everything started to sink. They came in and started work on it as much as they could. They did a lot of water and sewer work over there as well. But literally, there was a crack. You can go to the side of the house and see the crack from the ceiling all the way down. And you can walk in the back of the house and literally stand there. This was the level of the floor.
Yeah, that's a lot.
Just like,
yeah.
And
yeah.
And they had to, after the estimates, the specialist said that they had to go in and do injections. They were gonna dig about 15 feet, I believe, if I remember correctly. They had to dig, put some pipes up under the property, and with their machines and some type of injection, they were injecting up under the property and cause it to raise.
They'll pump that slab up. They'll pump the slab up, and then, like you just said, they'll inject it and fill it.
How much?
So
how much was
right,
the
right.
estimate?
It's about 15 feet. So they're going to dig out your entire footer on the side of the house, come in, they pump up that old slab, and then restabilize it. It's not a cheap expense.
It's not a huge expense.
Yeah.
No, it's not. It's not cheap. Yeah, it's expensive.
Right. What was the estimate on that?
The estimate, I would have to look in my email to get exact figures, but I think it was somewhere around 10 grand with just a roof and the foundation alone on that rehab. This was going to be a complete rehab on the property. With just a roof and the foundation, you were looking at 30 grand. Right. Just those two. Yeah. So that foundation issue, it was somewhere around 10 grand just to get it done. And then there was another suggestion that they made that was a lot more, almost double the price.
What was the total surface area that they would have had to raise?
It was a screened-in porch. I don't remember the exact square footage, but it was an illegal add-on of a Florida room. It was a screened-in porch, and it had no business being there, to be honest, because there was a part of the house that was originally the porch. They put some walls up and just extended another piece of slab to add a porch, and then they covered it, screened it, and that's the part that started to just drop over time. And then they also have foundation issues in the front as well, because I think it was just that plot of land that the property sat on. And I think the homeowner said that a lot of other homeowners had that same issue, but I didn't see it as bad as it was at their property for the other. When you stand in the yard and look a couple houses down, you didn't see the same issue, but it was pretty bad. It was pretty bad. If I have photos, I don't remember if I still have the photos.
I've got some photos on the crack that I'm referring to. Can I share the screen? Am I hogging the Zoom or?
You are not hogging anything.
All right. Could I share my screen?
Yeah, let me. Yeah, are you allowed to, or does it say you're not allowed to?
It says I can't.
Let me see. Let me also go on my email.
Yeah, D, put your email and your information in the chat.
Okay. In the chat?
Yeah, I'm going to put it in the chat. That way we can just you can share with me the photos and I can share with you the
Oh, all right.
yes.
All right. Yeah. Well,
I just made you host.
all right.
Good.
And anyhow, what this looks like, it's about 1/4 of an inch crack on both sides of the building, and it's a fiveplex, a 1-story fiveplex. So you have the complete back on a slant, it's shifted down. And when you put the level on it, it's not as big as you mentioned, but it's I think the bedrooms are about 1/2 inch on a slant. So the front of it kind of, you can see a tilt on the front of the building.
Wow.
So,
Where's this property located at, Juan Carlos?
in McAllen, Texas.
Okay.
In McAllen, Texas, and it's
McAllen, that is, where's that? Middle Texas, right?
no, this is the border. This is the
Okay.
border.
Okay.
South, or is it
The south border with Reynosa. I don't know if you've heard of it. Yeah, the Rio Grande Valley is like the total valley. It's like an 800,000 metro area with several cities connected. And the big thing going on there is space base Texas. Now that Elon Musk is building a space base there, so the market has gone up in the whole Rio Grande Valley, but more particularly in Brownsville, in Austin with the Tesla plant and Elon Musk moving there.
Are you gonna share your screen?
If I can, yes. Oh, now I can. Okay. Yeah. Let me see if I got.
I also when it's my when I talk, I'm gonna share my screen as well. I actually have my 2019 expenses and income report from the Airbnb, so I could show you, Robert. Basically, like that was then, it's now, so it's a little.
Okay. This is from the inspection. Up here, you can see it's more than 1/4 inch. That's on both sides of the building, and this is a slant on the back of the back, one of the bedrooms, and this is a whole the front porch of the fiveplex, and you can see that the whole what do you call this? I guess the porch has different levels, but mainly it's sort of you can see these cracks. Maybe it's a long report from the inspection, but this is how you would see the bedroom. So it's not this, it's not 1/2 foot, but it's clearly at a slant. And my estimate, just from talking to people, was maybe 10,000 for each apartment. This is a roof, yeah, but this is mainly the crack. Let me see if I can share with you.
By the way, you have a good inspector.
Pardon me?
You have a good inspector.
Yeah, it's a licensed inspector. I actually went with him and took pictures and videos. And what got me excited about finding these things is that there's the opportunity to add value. And they said, when you find them in terrible conditions, those are the jewels, because there's the opportunity to add value. So I made the offer for about 45% of the asking price, and we're still looking at that.
What is the asking price, Juan Carlos, if you don't mind me asking?
Yes, it was 215.
Wow.
215,000.
Yeah.
The rent, and they're 1-1s, 1 bedroom, 1 bath, and the rents are the highest ones are 620 and the lowest one is 575. But I went in there, and one of the apartments is just, it looks like it came out of, I took a video from one of those, have you seen the Hoarders series? Just like that, Hoarders. And and I'm going, yeah, this is what they talk about, you know, in the seminars and the podcasts, you know, this is the opportunities.
Yeah.
Did you was there any issues with the roof because of that structural sag?
Yes, independently from the sag, the roof was had like the shingles. Some were missing. You could see the boards. This is a 1990 build, and they haven't done any major work or any major repairs on the roof or otherwise.
So you're looking at probably, you know, a little over 100,000 in renovations right off the bat with just that and the roof, correct?
To be honest, my estimate was higher, around 142, to do all the, you know, not high end, but redo kitchens, floors, you know, bringing up to date, so that, you know, if you're spending the money, might as well try to get the bigger rents, the higher rents.
Mhm.
Sorry, did you have a contractor give you that estimate, or is it just kind of based off of, where are you basing that renovation?
Basing of bits and pieces from contractors, from estimating 52,000 on
Structural,
the
yeah.
right, on repairing the foundation, basing it on a medium rehab, out of Ensign Young from Bigger Pockets. He wrote a book on how
Yeah,
to
so
do the
you're going off of square footage, probably.
square footage, and
Yeah.
then just going on to Home Depot and looking at costs for spiral staircases that need to be done, estimating on insulation and the square footage for that.
Yeah.
You know,
The
you
thing
know,
with what we're seeing in the construction industry right now is the cost of material and labor is skyrocketing. It's like almost like a daily occurrence that you're just getting, you know, you go from paying $3 for a 2x4 to, you know, 2 months later it's $6, 3 months later it's $9. So it's just like, you know, the tariffs and the building cost and the lack of labor and the high demand is, you know, I mean, I've been turning, me and my project manager are honestly turning good projects that we would have taken, you know, a year ago or even 6 months ago. We're turning them away right now because it's just, it doesn't financially make sense for us, because by the time we actually start that project, unless we go out and source all that material ahead of time, you know, we can lose our ass on it. You know, you'll bid a project, and then 3 months from then, you know, you'll actually begin work, and then, you know, it's a 3 month project, and then so down the line, at that point, your cost of material has already raised 50%, and this is what I've seen in the past 6 months. You know, and on top of that, it's hard to source too. So like Romex wire, PVC, lumber, it's getting difficult to source that material in certain areas, and you know the manufacturers are limiting the amount that you're able to buy, and so unless you you know, like those full gut rehab projects, you know, they're still good. They're still go for it. When you start getting into structural new builds, when you start, you know, getting into dealing with the city, and it's a 3 month process, and you go through zoning and everything else that starts holding you back. I mean, even at a full gut rehab down here in South Florida, we can, you know, usually bang those out in 4 to 6 weeks. You know, if we're not dealing with anything structural, and that's including a roof too. I mean, if unless, you know, as long as we're not putting, you know, if it's just a re-roof, it's good to go. You know, we can get that done in a month, and all the interior gets done too, and windows, doors, all that good stuff. So, but it's just crazy how the material is going right now, and the lack of labor too. So, I mean, I literally probably one of our hardest, our biggest challenge right now is finding solid guys that will, show up, do the job right, and complete it on time. Really, a lot of these guys they're bouncing job to job.
If lumber is supposedly has gone up 200%,
Yeah.
and does that apply to concrete, to,
I mean, concrete hasn't really,
Mhm.
the price of that hasn't really raised, but the concrete, like delivery, the pumps, all these guys are, they're in such high demand that they're picking and choosing their jobs, and they're raising their rates, and everybody's doing the same thing. So, I mean, you talk to a good builder anywhere, a good builder, not just the fly-by-night builder. A good builder is backed up about a year by now. So,
Yeah, and you're going to find too, in my past life, I was a manager of a very successful lumberyard here in Colorado, and I still have contacts, and just to let you know, Juan Carlos, they're projecting that by mid-July, the prices will have escalated to 300% above normal.
Wow.
And the one thing, and I don't know if it's like this in Florida, Chase, or not, but typically your labor price mimics your lumber price, right? So if you've got $100,000 lumber bid, you can expect labor to be roughly about $100,000.
Yeah.
What I mean?
So your basic subs that they're the guys that they're not like general contractors, or they're specific trade licensed people. A lot of guys, depending on the trade, are going to base their they're going to base their labor, like you said, right off of their material. So, half the time they'll double material, and that's the bid. I mean, they don't go too deep into anything. And so, as material goes up, labor goes up.
You're doing strictly turnkey, Chase, as far as you provide materials and then you mark them up a little bit? Is that typically how you run your business?
It depends what kind of project we're doing right now. So, I mean, typically we have just been trying to stick to doing our own projects. But I mean, the way that I structure my business is I try to bring the brokerage and the construction side of things. So I have a project manager who's also my partner in the construction company, and we'll bring it in to these South Florida homes that are on the water, beautiful homes. They're just outdated. They're ugly. But it's in an A+ neighborhood where, even at an ugly home in an A+ neighborhood on the water right now could sell for, 800,000-900,000. If you just fix it up, put about 100K into it and make it nice again, it's selling for close to like 1.8, 1.9. I mean, they're getting 2 million for, properties on Bayview on the water. So it's insane. So we'll bring that to a potential seller, say a guy that, is looking to sell their home, but it's kind of outdated. We'll say, hey, look, we can sell it for this number right now, or I can bring my crew in here and 6 weeks from now, we can sell it for this. And, we'll split some of the equity, and it depends. We do it deal to deal. So, I'm getting the listing agreement. So, it works it's a win-win for everybody.
Yeah, I mean, it definitely sounds like a great business model. Another thing I'm seeing here in Colorado is you're seeing a lot of people joint venture on that, where you get a builder who will say, hey, I'll joint venture with you. Here's what you do. You put up the house's collateral.
Exactly.
I'll go get the loan, and I'll handle all the construction. I'll do all this. And then at the end, we'll split the profits. I'll give you X amount over what you're asking for, once we have it all said and done. So it's like you guys were talking about earlier, just getting creative. Definitely would like to talk with you a little bit more, Chase, because I'm getting licensed. I'm a broker here in Colorado. I sell real estate here in Colorado, and
Nice.
I'm in the mountain community of Vail. And, I'm going to get my license in Florida as well, because I can see, myself eventually transplanting there here in the next couple of years, years. So.
Awesome. Yeah, I'd love to work with you.
Beautiful. So we have one more gentleman, Bobby. Why don't you go ahead and introduce yourself and tell everyone who you are and what you're doing, and what your
Absolutely.
next venture is.
All right. So guys, Bobby Sharma, 3 days in Florida. I'm officially a Florida resident, transplant from San Francisco Bay Area. So thank you. Let me see. So done a lot of real estate, different deals, not as exciting, not as sexy as your deals, but you know, being busy. I've flipped. I'm primarily a private money lender, so Chase or Deontay, Robert, you know, Juan Carlos, if you need any capital for your fix and flips, I have something that I've built out that could be helpful for you guys. And then I don't know, Eric or Juan Carlos, I don't know if you can make me a presenter, but I want to show you something because you're starting out as real estate investors. One of the things we do is we get so excited about the deal that we forget to track and I think some of you will be tracking the performance because I heard, you know, you're very aware of the numbers, right? So, but a lot of people, they don't take the time to look at the actual performance, you know, of your property. So for example, if you're thinking you're going to get 500 a night for your short-term rental, well, the question is, are you in the future, right? Are you going to get that 500? Are you going to get more or are you going to get less? But whatever that is, you need to track it. So let me just show you something real quick. Who is the host? Let me see here. Hey, Juan Carlos, can you grab my name and there's a drop down. You should
I don't think I'm allowed.
No, you're the host, so you're allowed.
Okay. How do you do that?
Just click on my name and then there should be a more button. Eric, yeah, no,
okay. I already made you the host.
There you go. Perfect.
It's in Spanish, so I have to translate. See what the instruction is.
It's a good thing you're bilingual. So, all right. So for the past 1.5 years, and poor Eric, you know, he was my guinea pig when we were first launching the product. But what we have done is we've built something that's a little bit more sophisticated than an Excel spreadsheet. But as you have properties that you're adding to your portfolio, and the ones that you've just acquired, you know, especially Juan Carlos and you know, Chase, if you got rentals, or Robert, if you got rentals, and Deontay, I know you want to work. We want to get you into some rentals for long-term wealth building, you know. But this is where you would come in and kind of track your property. So I'll just give you an example of one of my rentals. So here I'll go into this rental, and it tells me, you know, what's my net operating income, what's my ROI, what's my cap rate, what's my total ROI, what's my equity. I can go into the financials. I can see what it's rented out for. I can see what my expenses are. What's my insurance? There's no HOA. There's no property management. I can see the details of the property. When did I buy it? You know, what did I buy it for? What's it worth? Et cetera, et cetera. So all the details are here. And then this is kind of critical in the sense that this is all my transactions related to this property. So it's kind of like taking QuickBooks, except now you don't need to sign up for QuickBooks, but all your transactions. So for example, if I had let's say I had a $100 bill, and it was for let me see, it was for something like that, and it was on May 10th, and it was for let's say it was for me. Sorry, it was for a water. And it was to Joe, the plumber. And if there was a receipt, you could upload the receipt, but soon you'll be able to take a picture with your camera and upload that receipt. So it's there, and it's an expense. And then if I go to my overview, it's going to show up as an expense. So here's the $100 that showed up. It impacts my net operating income, et cetera, et cetera. But I can track all my transactions here. I'll just quickly go ahead and delete that transaction. I don't want to link, sorry, not duplicate. I can delete. So that's all it took to delete the transaction. So now I have everything. So some of you will have to do what are called a Schedule E report. So for your rentals at the end of the year, you're going to have to run a Schedule E report. And you know, normally you calculate your income, your expenses, you know, what did you buy the property for? What was your cost basis? What was your CapEx? What was your maintenance? You run a report, you give it all, or you hand over a shoebox of receipts to your bookkeeper or accountant. You won't have to do that anymore. You'll just click here and it'll produce with one click a Schedule E report. It'll be an Excel file. You can fudge it. Everybody fudges it. And then you give it to your accountant. Okay, so also you can store all your documents in here, your leases. I can look at all my my insurance stuff. For example, I can look at you know, here's some COVID related stuff. Here's my insurance for the property. I can search for it. So if I do a search for, let's say, Arian, I can find the documents called Arian. If I do a search for 2021, it'll find 2021. If I do a search for 2020, nothing there. So all your documents. So what we did, we looked at all your transactions, your documents, your contacts, your KPIs, your financial KPIs. We put it all in one system, okay, for all your properties. So for example, Robert, you got a property in Tampa. Maybe the guy who's managing it is on Appfolio. Okay, I'm just making it up. Let's say you own another property in Boulder, Colorado, and that guy is managing it on Yardi. Well, so you have all these different systems. What we did was we brought all the data into one platform. So I'm going to show you now how to add a property real quick. I promise it won't take long. But all your contacts are in here. Yeah, all your contacts are in here, and we're enhancing those features as well. So I can do private lending, I can do syndications, I can do rentals, primary homes, and soon we're adding corporate housing, short-term Airbnbs. Right now, you can treat the Airbnbs like rentals. We're doing tax liens, we're doing land, we're doing fix and flips, and we're doing wholesale. We're going to add those features into our platform. But right now, I'm going to show you real quick. I promise it won't take more than 1 minute. How to add a property, how quick that is. East 39th, Independence, Missouri. You can tell it what entity you're owning this under. It's asking me if it's self-managed. I'm going to say no. And then if it's no, it's going to ask me, what is your platform that your property manager is using, including Airbnb? In this case, I'm going to say Appfolio. Now, through Zillow APIs, it pulled some information. You can override it. Purchase date. I'm just going to say I purchased it at the beginning of the year. So just to simplify things. Sorry, 2021, January. Okay. I bought it for 100,000. Down payment was 25. And it's saying that the current, according to Zillow, the current market value is 170. Maybe it is, maybe it's not. The actual rent is 107.5. Property tax are 1,000. You just set this up once, okay? So you don't have to do it every time. Property management fees are $100. Okay, now I've set up the property. Okay, now what I'm going to do is I'm going to go into the ledger and I'm going to import some transactions. So you see, because I picked AppFolio, it's saying, hey, do you want to bring in an AppFolio Excel file? In this case, I'm going to do a shortcut because I don't want to chew up a lot of time. I'm just going to do it manually for 2021. Well, what was my taxes? What were my actual taxes? What was my actual insurance? What was my actual rent? And then I need to add one more transaction called mortgage. Okay, so I'm going to say mortgage interest, Wells Fargo. And in this case, it's, I don't know, it's okay, monthly. So what it's asking me, is this monthly? If it's not monthly, we automatically default to yearly. In this case, it's monthly. Let's say, I'm going to go to the overview now, and now you can see how my property is performing and kind of how it's built out, what's my net operating income, what's my ROI, and so on and so forth, what's my equity. I can also upload pictures, so I can come in here. Let me see if I can find any pictures. No, all of this is desktop. Well, let me see. This could work.
Is there pictures of all of your girlfriends, right?
That too. You can do that. But yes, this is all the pictures. So anyway, if you had real pictures, you could upload those. You can also import documents, and I won't dive into all that. I think I showed it to you. But the reason I built this was, I have syndications, I have rentals. I do mostly private money loans. These are all my private money loans that I do that are active. And the other thing is, of course, we all know Steve Rosenberg. He's one of our advisors. He's one of our partners. So his education is going to become part of this platform. I'm working with him on his mastermind. Steve and I have become just solid friends over time. But this is my team. These are the two. My partner, he does all the coding. He does all the development, the programming, the design, all that. And I just do the product management. It's called product management. I do strategy. I do kind of the feature list. I do the QA. Eric, unfortunately, was, like I said, a poor victim of the early version of this platform. So poor guy had to go through some really painful incidents where he helped us debug the platform. And I'll be honest, I mean, if it wasn't for Steve Rosenberg and Eric and I wouldn't have met. So I'm very grateful to Steve for that. But okay, so that's my. I gave up my job in Silicon Valley. I was working for a tech company to pursue this. So I'd love it if you guys used it and it's free. Okay, it's free. There's no charge for that. Give me your feedback. Say, hey, listen, I tried this, it didn't work, or what can you do to make it better? And you can say, listen, I have this Airbnb has this special expense. And I didn't show you everything, but Robert, if you have like cleaning expenses, you have fees, I can show you how you can add all of that. And then at the end of the year, and as in real time, you'll be able to see how well your property is performing, what's your occupancy. And the reason we need to do this is mainly because the investors that track the performance of their assets, that know their numbers, tend to do significantly better in their returns than the ones that don't. The ones that don't are like, hey, did my rent come in, or did the partial rent come in, or what? I don't know what the equity in my property is. I know that the tenant's paying rent usually, but they don't know their numbers. They don't know their loan balances. They don't know some of those details. But if we make it easy, and by the way, I didn't show you everything, but we're making it so that you don't have to do a lot of data entry. We can read the bank accounts and automatically assign the transactions to your bank I'll show that to you maybe in another time. But the idea is that the people that are tracking, Chase, like when you're doing a fix and flip, if you don't know your numbers, like you could be upside down very quickly if you don't know your numbers.
This system is quite intricate and very nice for guys like me that go out there and, I'm face to face. I got to talk to people. I got to be in front of people. I go out and I ruffle a bunch of feathers and I make a mess of things. And if I don't have somebody behind me to clean it up, or a system like you have, then come tax year, and it's happened to me before where, I'm shelling out 5-6 grand in a retainer for an accountant to go through all of my, just to go through all my books and everything, just because, to keep the IRS off my ass. And it's stuff like that is huge. Systems are, without the right systems, you'll never be able to scale. And, you can only do so much yourself.
Yep.
And to be able to leverage things out is huge. So Bobby, that looks awesome, man. I look forward to using it.
Thank you, sir. Look, like Chase said, I was one of those guys that at the end of the year, tax time, April 10th, I'm downloading all my Excel files and where's my receipts and where's my Chase bank account or the credit card account. And I'm trying to, this was the year, so I've got about, at any given time, I've got about 30 to 40 private money loans. I've got 7 to 9 syndications. I've got about 8 to 8 rental properties. So I have to manage a lot of stuff. This year, just told my VA, hey, log in, download the Excel files, send it to the accountant. Done. The only thing I know is I do, especially the first week of the month, when the rent checks and the interest payments and the distributions are coming in, that 1 week, I have that tab open and I have my bank account kind of open. So I'm looking at transactions and I'm updating it. And it takes me literally like 30 seconds per property to update the transactions. Then I'm done. When tax time came, she just downloaded like 50 Excel reports. My accountant has a shared drive. She just uploaded it, put every Excel file had its own address. In the name, it had the address of the property. My accountant she ran the numbers. So anyway, the idea is that, look, I hope that one day you're going to have a bunch of doors. You're going to have a bunch of investments. You'll need a system to track it. So anyway, that's pretty much it. And
thank you, Bobby. About a month ago, Eric and I had a lengthy phone conversation, and Eric made a great sales pitch on it, and I think you just confirmed it. I have a question. You mentioned QuickBooks. Is this something where the accountant can log in with a password and then take the information and put it into their QuickBooks system? Is it
good question. So we are building what's called a trusted user. Okay. So it's not there yet. So what we're going to do is, let's say, Juan Carlos, you say my bookkeeper is in Dallas, Texas. Okay. Mm-hmm. And I need my accountant is in Dallas, Texas, and I need to give them access because I don't want to provide them with my username and password. So what we're doing is we're creating a trusted account. And what will happen is you'll create that account, that they'll have a read-only, a view-only, read-only view of your assets. And yeah, it's meant for virtual assistants, and it's meant for bookkeepers, accountants, and maybe your spouse. Okay, maybe.
Right. Well, so, thank you. Yeah. Certainly we'll have a go at it. I did visit the site, but I didn't engage with your presentation. That's something I definitely will do.
Thank you, Juan Carlos. And if you have Gmail, you can do single sign-on with Gmail. Yeah, good.
Awesome. So, Bobby, I'm still waiting on my business card for business capital.
You're gonna get one.
I'm
And we're gonna put your picture on the website too.
listen, all I want is like a debugger is like my title, and that's it.
Sounds good.
But yeah, hey everyone, I really appreciate you guys coming on today. I mean, we went over time, but literally like every single conversation, piece, experience, anything that you guys have done. I mean, this has been a very interactive meetup. I actually feel like we're in person, and hopefully we'll do that very soon. I know some of you who are obviously not local. What I will try to do is do 2 meetups in 1 month, one online person. That's what I really want to strive for this year. So, but anyways, a little bit about me. My name's Eric Greenstein. I started SoFlo REI almost 2 years ago already. Um, Started because I couldn't find anything like this. Any other meetup I went to that was a real estate investor, they were selling me on their bullshit pitches of them being a broker or a mortgage company or anything that they could basically sell me or sell me a course or it's just like an introduction for me to get sold on basically. So I was kind of fed up with that. So kind of just created my own and see how it went. And here we are. I mean, through coronavirus, went Zoom like everyone else did, and we actually, I'm actually kind of happy. Well, not happy that that happened, but luckily we got and grew a bunch of speakers, and we just have a really good following right now. And I want to grow that a lot more. So definitely blessed to have that opportunity. A little bit about me. I'm actually in construction as well. I'm a restoration contractor, remediation contractor. We also do have a GC license as well. So here in well, we're up more in like Boca Raton, Del Rey, which is from where we are now. It's about like 25 minutes, 30 minutes north. Um, my family's been in the business for about 15 years, so we know that business very well. Water damage is an issue here in South Florida, and even though there's like 4,000 restoration companies doing the same thing, it's all about how you're different and your connections and your network. So we're 15 years strong. My brother and I, we run the business, and kind of like Chase, we're having issues with labor big time. So we're pivoting and we're going with our subcontractors and just running that as a business. It's hard to find any labor, any even like a helper. It's just very difficult. I mean, we pay pretty good a pretty good livable hourly rate. So it's just right now it is tough. So we're trying to build that, but along that, I found real estate investing interesting in the end of 2017, and I purchased a short-term rental and did the whole Airbnb thing. I kind of a little bit lost my ass here and there. I didn't know what the hell I was doing. I just dove deep right into it, and then I found out about bigger pockets right after that, and I found out about multifamilies. So I wish like we all say, I wish that I knew about multifamilies before we purchased single family, and that's basically what happened to me. So, while I was doing my Airbnb short-term rental, I was like, you know what, I just need to purchase a property here in South Florida. So, sold that in October of 2020, and here I am in a beautiful duplex that Chase helped me found. It took about 6 months, 7 months, probably a little longer than that to actually find something. So it was a little difficult, but each day just kept going and going. So didn't stop. Have a positive mindset. Obviously, I found Steve Rosenberg, his mastermind back in August, and ever since I've been a completely different person. Luckily I literally met all three of you through his mastermind. So extremely grateful for that, to happen, right? I mean, if coronavirus didn't happen, a lot of things obviously wouldn't have happened, but it was more so a positive thing for me, and I appreciate, and but yeah. So basically, that's me. Right now, strategies are, fix and flips. I want to get into, but I really love the whole multifamily. Love buying holes. What I'm doing now, house hacking. So just a couple of strategies that I like. But yeah, I'm willing to work with anyone. I know Bobby and I are looking at a couple of properties around here, and you know, I welcomed him with big arms and a nice hug when he came, and and finally moved here to South Florida, because I know we can definitely find some good properties over here if we have the right team and the right connections. So, um, yep, that's basically me in a nutshell. Like I said, I want to do this twice a week, one as a meetup via Zoom and one here in person. So, if you guys want to join us, obviously more welcome to do that. I will
Thank
send
you.
I know that everyone has been sending their emails here, and I believe I have Juan Carlos's, and I have Robert's as well. If not, I can just copy that.
So
I'm
Eric, can I
sending
ask
my
you a
phone
question?
number.
Oh, sorry, can I ask you a question, Eric? Real quick here. So, and I just want to hear kind of your thoughts on this. Why multifamily? Why you say, hey, wish I'd have found multifamily before single family? Um, just out of curiosity, I want to see, because I have some similar thoughts, but my first investment's a single family.
Yeah.
So
No, I mean, well, so it's not that it's a bad thing. I like single family. I just like the fact that I like house hacking. So if I can find a duplex that has a 2-1 and a 2-1, or a triplex with the same, 2-1 layout, and then rent the other two out or one out, and then the other room that I have here I rent out. Um, that's my strategy. Um, I do believe that single family is still a win if you can find. There's short term here in the area I'm in. Before about like a week and a half ago, next door, I actually did a little short term, and there's an industry that's really popular. It's actually the yachty industry here, right? Um, and I put bandit signs out when it was vacant all around the area, and these awesome ladies called me, and they're like, "Hey, like we're interested. Like, do you think you can do like a couple months?" I said, "Yeah, sure." So I got them beds. They didn't need a lot, which is great because they're usually out in the water, or they're like a week out and they come back in and they're like basically not there. So
yeah,
I needed short term for a couple of months. So I did that. So if you can find, and that, to kind of like answer your question, if I can find something like single family or whatnot, and do that strategy, I would. I just feel like at the time, at 2017, if I bought here,
yeah.
expect duplex, that's kind of where I was going with. What I wish I knew, because I would have definitely bought something here at that time, other than on the opposite coast. So, actually, real quick, if you guys have time, I just want to show you a screenshot real quick.
Sure.
Robert.
While you're doing that too, just so you guys know, I mean, I based my numbers very conservatively on my short term. I based it on $200 a night, 60% rental. And that, and if I can accomplish that, which I've spoken to says you should be able to,
Yeah.
then that would be 44,000 a year. Just FYI, that's where I ran my numbers at, trying to be very conservative with that amount.
Sure. Yeah. I mean, that is conservative. How I kind of ran it, I just did 15 days, half a month. My market called for $90 a night to $150 a night, depending if it's season or not. Let me share this with you. Now, this was before I knew about Better Capital. This was before I knew about really how to like put anything in spreadsheets. But I made a spreadsheet. It's not beautiful, but it basically shows what I made for Airbnb, what I made for HomeAway, like income wise, and then expenses. I didn't have, again, it wasn't like it wasn't a great year, but I made a little bit of money. So let me just share it with you. Oh, Bobby, you think you can make me a host real quick? Awesome. All right. So this is back in 2000. This is in 2019. And this would actually be good for you because you can actually see where and what months are kind of popular, right? You have like your March, right? You have your April, um, and then so this is like Airbnb down here. So 29,000 basically was brought in through Airbnb, and HomeAway was 3,000. Um, Now my expenses, like I didn't like my mortgage was really high. It was just a mistake on my end. I've learned from that, but it was high for what it was. I only purchased a property for 225, and somehow like my mortgage was about 1,900 bucks, and it's kind of ridiculous because the duplex I have right now I bought for 390, and my mortgage is like $2,100, $2,200. So I kind of I don't really understand how that happened, but um, you know, so like this was basically kind of what I brought in. Um, so that kind of like shows you like what you can get um in a way. So it's doable, right? You can bring in 30K, you can bring in 45K. It just all depends, it all depends. And some of this was even off of Airbnb as well. Some of this was actually like this right here, the April 1st to the 22nd was off at Airbnb, and that was like 1,800 bucks, So it averages, it ranges. So you could, yeah, it's all about the market and what it calls for. Have you done any like when you did your research? What did you see per night, basically for like that, like rooms and amenities and etc. Like what did you see that like per night?
So when I first put this property, when I first started made a decision to put this property under contract, I started researching. I researched 6 months out and just kind of took the average rate from that because some of that would include hurricane season, which is the slowest time. Um, you know, and I found that the houses in this particular area, which there was 5 available at the time that I was able to actually look at, and they were averaging right around 300 a night. And so what I did was I subtracted 100 from that, and that's where I came up with my number of 200. And then I said, well, if I can get 200 and occupy it at 50% or more of the time, it's a pretty safe investment. It'll at least pay for itself and then cover any capex expenses that I have. You know, um, so that's kind of how I did that at first, and then I went on AirDNA and confirmed that my numbers are pretty close. I think AirDNA is probably faulty within 10% either up or down. You know, so I try to be super conservative. The one thing that Steve has been helping me a lot with is I have a ton of knowledge from construction, real estate, that sort of thing. So I have a tendency to talk myself out of deals, and I'm really kicking myself in the butt because I've talked myself out of some deals that I look back now and they're just slam dunk home runs. Um, you know, and so what I'm trying to do is take Steve's approach, which he's a data driven guy, right? He says, hey, get your emotions out of it. If the numbers tell the story, if the numbers line up, he's like, it doesn't matter if you're buying a property for $1 million. If the numbers add up, it's a good investment.
Yeah.
He said the purchase price is really irrelevant. He says, 10 years down the road, you're not going to worry about what you paid for it because you're going to appreciate it at a very minimum at least 3%.
Robert, question. You mentioned that you were thinking of the differences between multifamily and then the single family with the short term, right? Um, how how do you envision like repeating or scaling the same model? You know, shooting for the minimum 200 or maybe even the $500 a night. But how you said it was a lot of work. How do you solve the work on your end if you scale this say up to 10 houses? Have you figured that out?
Yeah, so I mean, I would then either hire or create a property management company. Now, the one thing I want to be careful of is I'm not trying to create a job for myself as far as that, because I do want this to be, somewhat passive. But this first property, I'm going to be a little bit more hands-on. And this first property too, I'm also going to put a little more bells and whistles on it, as far as, and Bobby, I'm interested in, and also you, Eric, to hear if you guys think it's necessary or not. But, I've been thinking, I want the property to kind of pop a little bit. So when people should come into it, when they show up to it, I want the backyard dialed in and around the pool. I want the front yard dialed in, looking kind of tropically with palm trees. And so I'm gonna invest a little additional capital in it. Um, and I'm okay with that because I know that my year one ROI is not going to look the greatest, but I'll have some capex that I've intentionally taken on to hopefully command a better rate, and then it all comes down to service and response as far as that. And then as far as scaling goes, yeah, property management would be the way to go. I mean, I've already started talking to some property managers. It seems like the going rate's about 20%. I'm waiting to get a list of what they cover, what they'll do. Will they do maintenance? Will they do, lawn care? Will they take care of the home management, or is that 20% strictly inclusive of we'll handle bookings on Airbnb, VRBO, HomeAway, and we'll make sure the cleaners show up and clean, but any repairs are on you. So I gotta weed through kind of what each property management company offers. Um, but initially it's going to be very hands-on for me. Now, if I put this on and I realize that I can, if I can make the kind of returns that I'm projecting, um, then maybe I just go ahead and hire out property management on this first one so I can fill that out and learn about that as well. Um, so I've kind of thought through a lot of different things, but I'm trying to be a little bit more hands-on with this, with this first one, and then scaling the plan would be putting it in somebody else's hands to run.
So the only difference, right, between what you did and I did is I didn't run my numbers when I bought the house. I bought it straight emotional. Like I went there, I saw the backyard. It was on the water.
Yeah.
I got sold. I got sold. I got sold emotionally, and it just ended up being like it wasn't a complete bust. I made a little bit of money, especially on the sale, because at the time it was like literally when the market just went crazy. So a cash buyer came down from like Maine and just bought it cash, and I was just perfect timing. But yeah, I didn't run my numbers, so I really I was just going literally off of like, yeah, yeah, yeah. Like the realtor was like, yeah, you can rent it out for this. I'm like, okay, cool, sign me up. You know. So I learned a lot, but you're doing it right. You're doing it right. All the numbers add up. Then they add up. It's yeah, good.
Yeah, and initially my strategy all along. So I struggled initially when we started the 60-day challenge or whatever. I struggled because I was really leaning heavily towards multifamily initially. That was kind of what I thought. But I use Airbnbs a lot when I travel. So, and not to take up too much time, guys, but what I liked about multifamily was I liked the ability to scale quickly, and I'm gonna, by nature I have a very tenacious personality. I'm very hunter type, and so for me, I want us to scale quickly, and multifamily seemed to be the best avenue, and really small multifamily, duplex to quadplex.
Yeah, absolutely. Um, so what you're a C, right?
Yeah. No, I'm actually, I'm a very high DI off the charts. Like
Really?
my S and my C were way down low.
Really?
Um, you know, if you ask me to sit down and create a spreadsheet, I can, but it's just, I mean, you know, I'll lose interest in minutes because that's just not my personality. I have to really focus on that, and that's something I'm working on. I'm getting better about is I can create a spreadsheet. I've done it for businesses when I was working for other people, but now I gotta focus even harder. It's even harder to do it for yourself when you know your own personality and you're like, that was like pulling teeth for me at the business. But
I see. I see. Definitely more I, but yeah, I'm definitely a C as well because I like running numbers, like just making sure, um, kind of like a little thing. I was this is like off of real estate, but I was looking into golf carts. And here in the Fort Lauderdale area, everyone's getting street legal golf carts and like driving on the road. I'm like, oh, it's such a good idea. Like, I want to buy one, and I'm like, well, if I buy one, they're expensive. Like, how can I make money from it? So,
yeah,
so I started looking. You can rent them. You can rent them for $300 a weekend.
what?
Wow, that's a great investment right there.
Wow.
But then I looked in and I started going into like the golf cart dealerships and I talked to one of the owners and yeah, I just asked him like, you don't rent? He's like, no, I don't rent because of the liability. He's like, the liability is really high if you rent. You need to get like higher insurance and um all that. So I mean, there's a risk, right? There's a risk in anything, but it would be cool because I would have a golf cart that I can drive during the week and then rent out on the weekend.
Yeah, and to answer your question, I guess I am kind of a little bit higher C because my disc assessment does this. So it goes D, I, and then it dips down at S, like way down here, and then it comes up to a C over here. So it's like, Steve was joking with me. He's like, so you got no soul, man. He's like, the S is the soul, man. He's like, I'm like, no, honestly, I do, man. I have a soul.
No,
He
that's
said the best salespeople are D and I,
Yeah.
and investors
or C or I and I,
C,
right?
C's,
C's, yeah,
C's.
Wow.
C's. Thought that was interesting too.
Yeah, no. So I do enjoy running numbers and I'm good at it. It's the spreadsheet portion of it all, that struggles. But Bobby, that's why I really am gonna try. I saw you. I was on the Think Tank Mastermind when you were on there with Steve when you first introduced that, and then it was good to see it again now. So I'm excited to jump in there and just put this first property in and track it because I already started creating a spreadsheet with all my expenses, all my capex that I'm going to do outside of what it was, and so I think you just made my life a lot easier.
You won't go back to QuickBooks or Excel again. I mean, look, once you set it up, the rest is just super simple. Follow each, for example, when you're Airbnb, you'll have the following expenses, right? You got your mortgage, your taxes, your insurance, your utilities. And then you got, your property management, whatever. They're going to just send you a bill. They're going to send you either an Excel or a PDF. And if you send over the PDF or the Excel to us, we'll build you an importer where you'll just simply import that whole PDF or Excel file, and it'll all get incorporated into the ledger for the property. You won't have to do any double entry.
Is that automatically, Bobby? Because that's how my property manager sends them. They've got their portal and they're all in PDFs.
Yep. So if you, Juan Carlos, if you send me a sample PDF,
Sure.
I'll see if we can read it right. Do you happen to know what property management application they're using?
It looks like their own. I don't know if it's in-house built, but it says Prop Access. I don't know if that's like
Okay.
for property managers or it's.
Yeah, it could be rent. It could be rent manager. Yeah, it could be rent manager, but it doesn't matter. Just send me
Okay,
a
let me look.
sample. Yeah,
Sure. I'm looking now, and owner web access.
yeah,
Does that sound?
that's called rent manager, I believe. I have those. Okay, if you send me.
Rent manager, yes.
Mhm, mhm, mhm. So I think we have rent manager. Let me see.
Here, let me. Yeah, it's rent manager.
Uh, yeah, we have rent manager. We can import rent manager. So Juan Carlos, do me a favor. Whenever you have time, shoot me an email and I'll set up a Zoom and I'll show you how to import, or I'll create a video. You can just watch the video, whatever is convenient for you. And then you just you just bring in that PDF. You say import, and we suck in the data, and then you just eyeball the data, make sure it shows up correctly, and then you'll be fine.
What do you suggest that I just sort of create the account first, login information, and then do that exercise with you?
Yeah, whenever you want. It'll take
Okay,
like 5 to 10 minutes, and
I'll do
then
that.
now you said you had it's a fourplex, right?
Yes, I have a fourplex and a condo that I've owned for several years that I didn't put into the property management account. I actually leased it out today, and I can see the difference because I had it long term. I mean, my last tenant was there for like 8 years,
Wow.
and um, unfortunately, her husband passed away from COVID. So we lost that, and yeah, that was bad. So now I'm gonna be I'm doing what Robert said. Learning, getting your hands a little bit dirty, visiting McAllen this weekend, doing some work on my own, um, and then seeing exactly why we need to outsource things.
Yep. Certain things you want to outsource, but you want to
Right.
keep a close eye. The way, like even Steve will tell you, pilots, they fly by instrumentation, right? So they look at, their altitude, headwind, crosswinds, pressure, weather conditions. So they're all doing it by instrumentation. Well, as real estate investors, we have to work with data, and then we have to work with people, right? People are do I have a high quality, trustworthy property manager? Do I have tenants that I have screened properly? Am I in the right neighborhood? Am I in the right city? All those things that matter. But once the property has been acquired and it's kind of operating, you need the metrics to tell you, hey, my properties in Brownsville, for whatever reason, are doing better than Dallas. Or why am I having more turnover in Indianapolis? Like why